All right, so today we are going to talk about break even. So break even in a business. What is the break even? Now, break even is a specific point in your business where the income that you get from selling your revenue is totally the same as all your costs, all your overhead costs, all your variable costs. So that's the break even point. So you're not making a profit, and you are not making a loss either. And then a lot of people actually ask me when I go to people, I say, have you done your break even? I say to my clients, break even, have you done a break even? I say, why do I need to make a break even? I say, well, it is very important because if you do a break even, you know exactly what, you got to stand, you got to benchmark styles, where's your budget, and that will give you a line. So, that is basically your surviving point. Now, I always say in business, we need to survive first before you can thrive. So you survive to thrive. So make sure that you hit that survival point. It's also good for pricing, to work out your pricings. For instance, once you get that break-even point, you know that, okay, from this point onwards, I can start playing around. You can look at all promotions, giveaways, discounts, that kind of thing. So it all blends into your pricing things as well. The other reason why break even is very important is you get a better understanding of your cost. You can work on your cost efficiencies. Say, okay, so this is where I break even. How hard is it to get break even? Okay, so my overhead is a problem. My variable cost, meaning my direct cost that I put into my products, that's a problem. You got to work on that efficiencies. So that's another good reason to work on your break even. Then another reason for your break even is it will give you an overall idea how the business is faring or where the business got to be to, like I said, to survive. And that all comes back to your cash. So get it all right. That means your cash is not going backwards. The last thing in a business that we want is for your cash to start depleting. And that is the most essential part of a break even. Now, I've actually got something here today that I want to sell. I'm not gonna sell it to you. Don't worry. I'm gonna put this on the market. It's my beautiful Outback hat, which I made. I'm almost done with it. I just need a little bit of a logo that says "Your Number Man." I can get on a horse and I can head for the blue yonder, if you know what I mean. So, all right, I'm gonna sell this hat for $100. Okay, and it's gonna cost me $50 to make. So I'm making $50 profit from it. That's all good. The problem I have, my overhead is pretty high because I had to go and rent out a production plant. I'm going to pay a person a little bit of money to do my administration. I've got to pay myself a small salary just to do all the marketing. And so there's overheads involved. There's cost involved. So, okay. So on this slide, you'll see there is my overheads. Okay. So it's $10,000 a month. So whether I sell 0 hats or 1,000 hats, it's still going to be $10,000, which I sell. Now, the next slide is you've got your overheads, your 10,000. Okay, so from when you start making one hat, you're going to incur a cost. You're going to incur a variable cost of $50, or a COGS, as I say, stands for cost of goods sold. And every time you produce an extra ad, it's $50, $100, $150, $200, and so forth and so forth. So you can see how the total cost increases with every hat from the overhead point. Okay, now let's just blank those two out for a moment, and let's move to another slide. Now this is my sales. So you can see, and this is basically, I mean, it's maths that you learn in grade 1. So each time you sell an apple, it's an extra 10 cents that's coming. The same with the hat. Each time you sell a hat, it's an extra $100, $200, $300. So it goes in an upward straight line. Now let's combine these graphs. Okay, so now what you get is you get your overheads, you get your variable cost starting from your overheads onwards, and then your income starting basically from 0. And as you sell, you get more. So at some certain point, you're going to see this is where my sales are, and my total cost is going to be exactly the same amount. So in my case, is I got to sell 200 hats, meaning I got an income of $20,000 a month that I need to sell And that is my break-even point. And that is my survival point. And from there onwards, I can thrive. And like I said in the beginning, once you know your break-even point, you got your line in the sand, so to speak. And that's what you aim for. I mean, we're not aiming for just break even in business. That's not what we make in business. But it gives you that survival point to thrive further on. So how do you work out if somebody asks you, how do you do your break even? What do you do? Do you have to go and do a graph first of all? Is a very easy way without doing graphs. You take your overhead expenditure, let's say in my case $10,000, and then you divide it over your gross profit percentage, which is 50%. I got it from $50 gross profit per unit over the price of the unit. That's 50%. So I divided my overheads over my gross profit margin, and I get 20,000. So I know my income has got to be 20,000 that breaking even. Another way to work it out is you can take your overheads. I say overheads, but it could be your indirect expenses or your fixed expenses. A lot of people name it, give it different names. So you take your overheads and you divide it by the gross profit per unit. So the gross profit per unit per hat is $50. So $10,000 over 50 gives me 200. So I got to sell 200 hats, and that's my break even. Anyway, that is me for today talking about a break even. Before I go, I just want to acknowledge the sponsor of this channel. It is Polaris Business Center, and you'll find more details from them in my show notes. I've actually got my wild horse waiting for me outside. It's very wild. I actually call him Even. So I'm off. I am going to break even. See you next time. Ciao.